Good morning, traders. Richard here doing a quick Ichimoku Cloud Chart market review of Sterling, GBPUSD currency pair. Now we'll take a really big picture look at what's been happening the last couple of months. After hitting almost parity with the US dollar here, we rebounded from a 1980s 85 low there. It was really a significant low there. If we go back to the data, we can see this was in the 1980s, the low there, 85 basically. And then we managed to rebound from that zone. If we look at the weekly, the rebound took place, support came into Sterling, it then grinded back to the bottom end of the cloud. You can see how the cloud level here is a key resistance zone. So we've got this old cloud chart support zone, which turns out to be a major resistance zone. Sterling still bearish on a weekly. Price action below the cloud is bearish, so there's only shorter term swing trades from key support levels and rebound levels to resistance zones, etc. But for Sterling to be bullish, we need to be back above the top end of the cloud here. So we're still bearish, and we can see how Sterling is really struggling to get past this cloud chart resistance here at the bottom end of the cloud. It ran into trouble at one spot 24.55, which is a major cloud chart support zone, now a resistance zone. You can also see it's a resistance zone here at the bottom end of the cloud. Ran into trouble there, tried to break past it again, only to be overwhelmed with resistance at the bottom end of the cloud. And now it's this front end cloud chart, which is another resistance zone there, 121, and then that level there, 120 spot 65, 1 spot 2065. Sorry. So it's struggling to get past this cluster of resistance now. So that's interesting that this front end cloud chart resistance so far remains in place now. It used to be a bit of a support there, but now still struggling to get past that. The critical thing is, will we get a rebound, a breakout past that level, and that will turn the chart bullish to Sterling. But so far, need to see a breakout from this resistance zone. Downside risk on the weekly is the front end, bottom end of the cloud here at 1777. And then if Sterling is very weak, we've got this old standard line of the cloud at 1414, and the bottom end of the cloud here, there's another cluster of support there at the bottom end of the front end of the cloud. So these are the downside risk targets: 1777, 1414, and 1296 to the downside if resistance holds at 1 spot 21 and 1 spot 2065 on the weekly Ichimoku cloud. Now turning to the daily Ichimoku, we can see how we now, after a fantastic rebound rally, beautiful buy signals, a cluster of buy signals there at support. Then we had a weak buy signal below the cloud. The cloud cross rebound buy signal there, support came in and then became extended. And then we took some profits here at 124 zone. This cluster of resistance there, that old cloud chart resistance zone. So it moved into a cluster of resistance between the old 124 and this 123, 122 zone. It was a bit extended from the top end of the cloud. Then that completes this swing trade from the rebound from the cloud support. We also generated a sell signal from a cloud chart perspective in the top of the cloud. Now Sterling's moving sideways. Did make another attempt after rebounding from the top end of the cloud. So there's another swing trade there, back up to the old cloud chart resistance zone, and only to be met with resistance. A double top there, now fighting for support at the bottom of the cloud, sliced through that, and ultimately entered bear market territory on the daily. So Sterling is now bearish on the daily, with this front end cloud chart support levels is now the new resistance zones. You can see that whole cluster of resistance there was tested for support failed, and now these are the resistance zones, and that cluster comes from the weekly as well. So that was a significant resistance zone on the weekly. Now you can see it attempted to rebound from this old cloud chart support level. So these are the downside risk targets. You can see a little bit of a rebound there. The upside potential is now a retest of the standard line of the cloud, and then the turning line. Sorry, that's the turning line of the cloud, then the standard line of the cloud, and then the bottom of the cloud. So that's the upside potential, but that's a swing trade in an overall bear market now. Since Sterling is below the bottom end of the cloud, it's in a confirmed bear market territory. And downside risk targets would be this 1799, and there's this zone there as well as that zone, and then ultimately the bottom end, these two bottom end cloud chart levels. So You can see that resistance zone there is now support, can be tested. That old support level there to the downside, 1683 is also a potential downside risk. And then these little cloud chart support levels as well, 112.68, and then the bottom end of the cloud, that cluster of support there to the downside. So these are all the kind of medium-term downside risk targets if this support fails here at 17.99 and 16.83. If support comes in here, we'll get a nice little rally back up to the bottom in the cloud resistance. But the front in the cloud still confirms the bearish outlook. Price actions below the cloud, that's bearish. So just be aware that any swing trades below these are counter trend to the upside. And the short trades are the best ones to be for these downside risk targets. Turning to the 4-hour Ichimoku. Takes a second or two to load. Turning to the 4-hour Ichimoku, you can see we've been stuck in a downtrend for a while now as the currency dropped after slicing through the top end of the cloud here. And then keep hitting the downside targets, the front end cloud chart support levels. And we had another sell signal here as it sliced through the bottom in the cloud, only to rebound within this cluster of support between 17.99 and 18.38. That's a key support zone. That comes off a very long, this low, that comes off that low, January low, as well as this cluster of cloud chart support levels. So November last year, this huge cloud chart support level, old cloud chart support level to the upside, came in and established support back for sterling at this key level. Now, what's interesting here is now the upside potential for this potential rebound is the standard line of the cloud there. One spiked 1934, as well as the top end of the front end of the cloud there at 1937. And then the other line in the sand would be this line now, this top end cloud chart. That's now a new major resistance zone. We are in bearish territory. To be bullish on sterling on the 4-hour, we need to be back above the top end of the cloud. So there's a potential for a swing trade in around these levels, back up to the standard line of the cloud and the front end of the cloud there. Those are the two upside targets. And then the third one on the 4-hour Ichimoku. Turning to the 3-hour one is also one I like to trade on. You can see also once again the support came in here. And you can see the upside target there would be the turning line of the cloud there, together with the top end of the cloud, front end cloud chart resistance. So we managed to get through this front cloud chart resistance zone there. So the next target would be the upside to that one there. And turning to the hourly one, give you a bit more feel what's happening intraday. You can see the rebound from this cluster of support, managed to get through the front end resistance zone, rebounded from the turning line of the cloud here. I can see a beautiful purple rebound there, digging into the bottom end cloud chart resistance, and the upside target on the hourly chart is this top end cloud chart resistance zone of 1933. So that's the upside resistance zone in the current rally. By that time, we should get the lagging line hitting this resistance zone and do expect some form of reversal. But these are all contrarian trades because we are trading below the cloud. And any price action below cloud is bearish. Price action above the cloud is bullish. So looking for a potential breakout above the top end of the hourly cloud on sterling. But these are the upside risk targets on the hourly. And the 3 hours, we're also looking at these upside risk targets, 1933. And then on the 4-hour one, you can see that 1933 there. And then this top end of the cloud there, that's the other level to watch out for. But remember, we are trading counter trend because we are kind of in a bearish outlook on the 4-hour chart as well. Daily, make or break, look at these upside risk targets there. Did find support from this cluster of support as well as this entire cluster of November last year of 2022. So it rebounded from bottom end cloud chart support level with upside resistance targets, those three there. In the current rally, but price action is below the cloud, so it is bearish. So we are any buys below this level is contrarian trades, and we will be shorting the sterling at respective resistance zones, and we swing trade support levels and sell at these key resistance zones. And weekly one, let's take a look there quickly. Weekly, digging into the cloud chart resistance as we've covered it. Now you can see multiple resistance levels there. Front end cloud support zone there. So watch out for a potential breakout on the top side if sterling is stronger there. But downside risk 17.99, 16.83, 14.14 and 12.96 on the weekly Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.